gold prices in focus. They traded in both directions after this morning's inflation data, with U.S. futures holding around $19.50 per ounce. What does the latest CPI print mean for gold? We want to head over to Jared Blikre, who has a closer look at some of the action that we're seeing right now. Jared.
Yeah, so no inflation. You would think, well, gold's an inflation head, might be going down. It did go down just right when the report hit, but that was one of those low liquidity spikes, looking for GC equals F. There we go right there. And this is a line chart. You can see on a candlestick, let's see a 2-day chart here, how it dipped below, but then it quickly recovered. And you can see we're actually holding around 1962 right now. Now, in a longer term view, we have been flirting with the 2000 level. Put a line chart right back for some time. 2050 is really the breakout level. I was talking to Ms. Schneider a few weeks ago on this program. She's looking for 3,000, but you got to clear 2050 first, and there's a lot going on here. I just want to get back to some of the largest marginal purchasers of gold, besides the retail public, is central banks. Now, this is a chart, I was showing this last week, goes back to 2010. This year, we are only through Q3. That's as of the third quarter of this year, so we could easily top last year's record. Interesting to think who's doing that. It's China, it's Russia. They have been de-dollarizing for some time. And then I want to talk about the interest rate structure. We saw a huge drop in the 10-year T-note. We'll see if I have time to get to that in a second. But over the long term, gold has really come unhinged from the bond market. This chart goes back 20 years. Here's gold prices in cyan. Here's the inverse tips rate. Not going to get into the wonky bond stuff just now, but suffice to say this morning is going in the right direction. It would close this gap from the yield perspective. Now, let me finish up here and look at the 10-year T-note yield. It was down as many as 15 basis points, which is a huge move for this instrument, especially off of a report like this. And it looks like stocks are really loving this. Here's the 10-year T-note yield back down below 4.5%. That is a huge psychological number there. The lower that goes, the more it helps out stocks. So not surprisingly, we got a big spike up on the announcement. I'm just going to leave you with the Russell 2000. The small caps are up 3.6%, the best morning in literally months, guys.
Lovely work there. That's gold, Jared. Gold. Thanks
Yes.
so much for joining us here in studio, as always.